Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Itt Inc. annual report. ITT Inc. offers a diverse range of businesses and services across three main segments: motion technologies, industrial process, and connect and control technologies. The motion technologies segment provides critical components for the transportation industry, including brake pads, shock absorbers, energy absorption components, and damping technologies under brand names such as ITT Friction Technologies, KONI, Axtone, and Novitec. These products cater to various vehicles, from passenger cars to heavy-duty commercial and military vehicles. The industrial process segment offers industrial pumps, valves, plant optimization, and remote monitoring systems and services for a wide range of industries, including energy, chemical and petrochemical, pharmaceutical, general industrial, marine, mining, pulp and paper, food and beverage, power generation, and biopharmaceutical. The company's products under brand names such as Goods Pumps, Bornemann, Engineered Valves, Hamworthy Pumps, Pro Services, Seatreat, Svanhage, Reinhout Pumpen, and Habonim provide aftermarket solutions like replacement parts and services. The Connect and Control Technologies segment offers engineered connectors, cable assemblies, and specialized products for critical applications across various markets, including aerospace and defense, industrial, transportation, medical, and energy. The company's brand names such as Canon, VEAM, BIW Connector Systems, CIA&D, Compulink, Aerospace Controls, Enidine, Compact Automation, Charles E. Gilman, Turnact, Neodin, Top Flight Components, Canoflo, VIDAR, KSARAA, and Micromode cater to these diverse markets. Overall, ITT Inc.'s businesses and services span across multiple industries and applications, providing critical components and customized technology solutions for the transportation, industrial, and energy markets. The ITT Inc. stock price has experienced a significant increase of over 39.1% in the past year due to several key events. One major contributor was the company's strong quarterly earnings and raised guidance throughout 2025. In Q1 and Q3, ITT reported impressive adjusted earnings per share, EPS, and revenue growth, exceeding analyst estimates and updating its full-year guidance with an optimistic outlook. The acquisition of SBX Flow in December 2025 was another significant factor driving the stock price increase. This strategic move is expected to expand ITT's position in highly engineered components and flow technologies, creating a world-class flow platform. The acquisition is anticipated to be immediately accretive to gross margin and adjusted EBITDA margin, with adjusted EPS accretion projected for 2026. Additionally, the company has demonstrated its commitment to shareholder returns by consistently increasing its dividend. A 10% increase in the quarterly dividend to $0.386 per share for Q1 2026 reflects a compounded annual growth rate of 15% since 2020. These factors have collectively contributed to ITT Inc.'s impressive stock price growth over the past year. ITT Inc. market capitalization of $17 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that ITT Inc. holds a significant advantage in their industry. ITT Inc. trades at a higher price-to-earnings ratio of 33 times and a lower price-to-book ratio of 4.22 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 41% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for ITT Inc. can be attributed to several key factors. Revenue growth is primarily driven by the company's strategic acquisitions, including Svanhage Group, a/S and KSARIA Parent, Inc., which have contributed significantly to its revenue increase. Additionally, the industrial process segment has experienced a substantial 24.3% revenue growth in 2025 compared to 2024, while the Connect and Control Technology segment has also seen a modest 0.8% increase. Furthermore, ITT's geographic expansion into new regions, such as the Middle East and Africa, has contributed to its revenue growth. On the other hand, revenue decline is primarily driven by the company's underperformance in certain segments, particularly the Motion Technology segment, which experienced a minus 1.6% decrease in 2025 compared to 2024. Additionally, ITT's performance in the auto and rail market has been weak, contributing to its revenue decline. External factors such as foreign currency exchange rates, interest rate fluctuations, and commodity prices have also impacted ITT's revenue. Changes in these external factors can result in significant impacts on the company's pre-tax earnings, highlighting the importance of managing these risks effectively. Overall, a combination of strategic acquisitions, segment performance, geographic expansion, and external factors has driven ITT Inc.'s revenue growth or decline. The net income of the company experienced significant fluctuations over the years. Initially, it was negatively impacted by various factors such as revenue volatility, raw material price fluctuations, supply chain disruptions, and inability to pass on price increases, resulting in a decrease of 1-2% year-over-year, YoY. However, this trend reversed in 2025, when net income increased by 11.2%. The adjusted net income also saw an increase of 11.2% during the same period. Profit margins were negatively affected due to various reasons, including inability to pass on price increases and increased credit and collectability risk, resulting in a decrease of 1.5-2.5% YoY. However, this trend was reversed in 2025, when gross profit margin increased from 34.6% in 2024 to 35.5% in 2025. Despite the increase in gross profit margin, operating income margin decreased from 18.7% in 2024 to 17.5% in 2025. The fluctuations in net income and profit margins can be attributed to various factors such as foreign currency fluctuations, tariffs, uncertainty in global trade policy, cyclical nature of customers' businesses, and increasing complexity and conflicting regulations worldwide. The company's inability to pass on price increases and increased credit and collectability risk also had a significant impact on its profit margins. The company's financial health has undergone significant changes in recent years. A notable increase in debt level is evident from the data provided. As of December 31, 2025, the total debt stands at $782.8 million, a substantial jump from the pro forma total debt after incurrence of indebtedness under term loan facility, which is approximately $3,660 million. This represents an increase of $1,877.2 million. Furthermore, long-term debt has also seen a significant rise, increasing from $235.20 in 2024 to $524.30 in 2025. The company's interest expenses have mirrored this trend, with a notable increase of $11.50, 31.4%, from 2024 to 2025. This is reflected in the net interest expenses, which stood at minus $37,400,000 in 2025 compared to minus $30 million in 2024. The data suggests that the company's debt level and interest expenses have undergone significant changes, indicating a potential shift in the company's financial strategy or operations. The financial performance of the company was mixed across various segments and regions. On the positive side, the Motion Technology segment stood out for its strong performance, particularly in the Friction Business Unit and KONI Business Unit. The Industrial Process segment also showed significant growth due to pump projects, while the MT segment outperformed with share gains in automotive and strength in rail. The Industrial Process Technology segment boasted a high operating margin of 21.8% in 2023. In terms of regions, North America and Middle East and Africa performed well, with revenue growth of plus 10% and plus 24%, respectively, in 2025. However, Europe and Asia struggled, with declines in revenue of minus 30% and minus 9%, respectively. The Connect and Control Technology segment was a notable underperformer, with a decline in operating income and operating margin. Despite some strength in aerospace and defense markets, the CCT segment's performance was not specified. Overall, the company's financial performance varied across segments and regions, highlighting areas of strength and weakness that require attention. Management's outlook and strategy. The company's management aims to achieve premier financial performance by combining profitable growth with operational improvements. This goal will be achieved through 4 strategic priorities: customer centricity, operational excellence, effective capital deployment, and sustainability. The diversified business model, consisting of 3 segments, Motion Technologies, Industrial Process, and Connect and Control Technologies, is expected to drive growth. Management has been actively acquiring companies that complement its existing businesses, including KSARIA, Svanhage, and Micromode in the aerospace and defense sector. This expansion strategy is expected to contribute significantly to the company's growth. Additionally, management expects a substantial portion of revenue from its backlog to be recognized in 2026, with the remainder recognized thereafter. The company has also received a positive government grant of $7.9 million for its production facility in Termoli, Italy, which is expected to boost operations. Overall, management strategy focuses on diversifying and expanding the business through strategic acquisitions and investments, improving operational efficiency, focusing on customer centricity, and managing risks through prudent financial planning. The company has made several strategic moves through acquisitions and divestitures in recent years. In terms of acquisitions, the company has acquired KSARIA in 2024, a significant move that is expected to bring new capabilities and opportunities for growth. Additionally, the company has entered into a definitive agreement to acquire SPX Flow for $4,775 million, further expanding its portfolio. The company has also made divestitures, including the sale of its Wolverine business in 2024. This move allows the company to focus on core areas of operation and allocate resources more efficiently. The acquisition of KSARIA and the pending acquisition of SPX Flow are expected to drive growth and expansion, while the divestiture of the Wolverine business is a strategic decision to optimize operations. The company has a history of returning value to its shareholders through 2 key mechanisms. Firstly, it has consistently paid dividends over the years, as evidenced by multiple references in the provided summary. This demonstrates a commitment to sharing profits with investors and rewarding their loyalty. In addition to dividend payments, the company has also engaged in share buybacks. The numerous page references confirm that this practice has been ongoing for several years, allowing the company to reduce its outstanding share count and potentially boost earnings per share. Concerns about inventory buildup and supply chain disruption are evident throughout the extracted summaries. On page 8, these concerns are explicitly stated, highlighting the potential risks associated with inventory accumulation and supply chain disruptions. The root causes of these concerns are multifaceted. Page 11 reveals that raw material price volatility, limited supplier options, and quality/delivery issues contribute to supply chain vulnerabilities. Furthermore, dependence on single sources for certain products exacerbates these problems. Tariffs imposed on imported parts and materials have also negatively impacted demand, as seen on page 16. Geopolitical uncertainty, shifting market demands, tariffs, trade policies, such as USMCA, workforce availability, and cost are additional factors contributing to supply chain disruptions, as mentioned on pages 30 and 33. The MT segment experienced unfavorable foreign currency, pricing, and sales mix impacts, which may indicate underlying supply chain issues. The data on page 86 supports these concerns, showing a significant increase in inventory levels, $59.6 million, raw materials inventory, $25 million, and work-in-process inventory, $23.1 million, from 2024 to 2025. These findings collectively suggest that inventory buildup and supply chain disruption are pressing concerns that require attention and mitigation strategies. That concludes the financial summary for Itt Inc. Feel free to comment below, and I will be happy to answer them when possible.